Hello, Flourish family. Welcome back to the Financial Flourish podcast, the place where women come to get smarter, stronger, and more confident with their money, without the overwhelm, without the guilt, and definitely without the boring jargon. I'm your host, Michele Pemberton, a CPA, financial educator, and your guide on this journey towards financial freedom. Today's topic: taxes. I know half of you probably wanted to skip this one. Taxes feel like the Brussels sprouts of personal finance. You know they're good for you, but you're not exactly excited to jump in. But this is not a dry, dusty tax talk. This is an episode that helps you keep more of your money, and that is exciting. And here's the connection. If you loved our episodes on saving with purpose and investing with confidence, this is the episode that makes both of those even more powerful. Because what good is saving if you're giving half of it away in taxes you didn't have to pay? And what good is investing if you're missing tax advantages that could push your money further? So today, you're getting the real deal on your year end tax planning. Simple things you can do right now that future you is going to want to hug you for. Oh, and if you're listening and you're like, Michelle, I need help applying some of this, you already know that you can book a one on one tax planning session with me, and we'll send the link that you can schedule that appointment. So let's get into it. Why does tax planning matter? Why should I even care? Is what you're asking yourself. Well, most people treat taxes like laundry. They ignore it until it becomes an emergency. But wealthy women think differently. Growing wealth means understanding that every financial move you make has tax consequences, either saving your money or costing you money. Here's the truth: you don't build wealth just by earning more, you build wealth by keeping more of what you earn. And you've heard me say this many times: it's not about how much you make, it's about how much you keep. Taxes are one of your biggest lifetime expenses, and you have more control than you think. Think tax planning like putting a lid on a pot. If you don't cover it, the steam, which is your money, just evaporates. But when you put a lid on it, everything stays in the pot. Everything works more efficiently. Everything grows. Tax planning is that lid. Now, the most common mistake that people make, anybody can guess? Waiting until tax season to think about taxes, right? Of course, because who wants to think about taxes all the time? But guess what? By January, the game is over. Your receipts are your receipts, your withholding is what it is, your opportunities to reduce your bill have already passed. So, trying to do tax planning in March is like trying to do meal prep while the food is already burning in the oven. So, that's where the year end planning comes in. This is where you can make a big difference in your financial planning. If you're a W 2 employee, you can check your withholding with the IRS tax withholding estimator. And you can find this at www.irs.gov. It's simple, it's quick, it's accurate, and it tells you if you're on track or not. Or if April is waiting to surprise you like bad plot twist. Now, if you owe taxes, you can fix it. You can just adjust your W 4, and that's a form that you give your employer so they can withhold the taxes from your paycheck. You can increase your withholding, or you can add an additional amount. This year I had some tax planning with quite a few of my clients who always seem to owe taxes. And we went through this exercise and they were able to withhold additional amounts. And I know that when we do their tax return in 2026 for 2025, that they'll be in a much better place. Now, when you do the estimate, as it says, it's an estimator, you might have a few differences here or there, but nothing like what you've had before. So it's very important to use it so that you can keep track. Now, for the entrepreneurs, the persons who get a 1099, your withholding is your estimated taxes. I talk to contractors all the time, and they want to know, oh, am I going to get a refund? Now, except for the credits, you're getting a refund of the money that you actually put in, right? So the entrepreneurs, the contractors, you need to send in estimated payments 4 times a year, and you might miss one. And if you miss one, it's fine. You can always catch up, because if you try to catch up now, then the penalties don't eat up the money that you have going forward for investing and for saving. So it's very important to pay ahead of time. Some people say to me, well, I'll just pay it when I file my tax return. And that's fine. And if you pay the full amount and you can afford to, that's fine. The problem is that you might still get a penalty. So if you can pay throughout the year, that is so much better than waiting until you file your taxes. So you're saying, okay, I'll do that. I'll use the estimator. So what else can I do? One of the things that you can do is retirement contributions. You can put money into your retirement account, max it out. And this is primarily for tax savings. This is a pre tax retirement account. So you have your 401k or your IRAs, your traditional IRA, your SEP IRA, and these allow you to lower your taxable income. And of course, it grows your future wealth because now you're investing this money. And this really is the link between investing and tax planning. Now, it's important to note that this might not work for everyone. You might not want to put all your money into a pre tax retirement account. You might be better off doing a Roth. So that's why it's important to speak to someone, speak to a tax planner, a tax professional, or a financial advisor to see which route is the best one for you. The next thing that you can do is HSA, which is Health Savings Account. You can have an HSA, and this allows you to save money. It's a triple tax advantage. First, you reduce your tax liability and your taxable income. You can save with this account, and you can also invest. And when you take that money out, you're taking it out tax free. So that's a big one that a lot of people are missing out on, even those who have an HSA. Now, it's also important to note that if you have an HSA insurance plan, your monthly premium will be higher. And so, you have to look at whether it's an advantage for you or not. So that's also why you'll need a professional to look at that. Now, your business expenses, and this is for persons who are self employed, who are entrepreneurs, who are contractors. You need to keep track of your business expenses. Stop leaving money on the table. Make sure that you have something to track them. Make sure that your receipts that you're actually checking and making sure that you actually receive them, not just paper, but you receive the money in your account. And we do have a tool that can help you. Go to our shop, go to absoluteaccountingcpa.com and click on Financial Flourish. And we have some free and some not free tools that you can use there to assist you to keep track of your expenses and your receipts. Then you can also use charitable giving. You do something good and you reduce your taxes, and you can strategically time your giving before the year end to make sure that you're taking advantage of this strategy. Now, it's important to note as well that this is just for persons who are itemizing. So, make sure that this is a benefit for you. Hopefully, you're not just giving because it's a tax benefit, but you're giving because you really want to give towards a cause. And then the last one that I'm going to look at is the credits that you can take, right? So you have your energy and home credits. So this is free money for upgrades. If you put in solar panels in your house or you made your house more energy efficient, these are potential savings that you have because they're credits that you can get. And also the electric vehicles, the EV credits. Now, most of these credits are expiring in 2025. So, if you haven't done it yet, you might not be able to do the energy and home credits one, but you have a month. So let's see what you can do. It's important to get organized now because chaos is expensive. Chaos is going to cost you money. If you have messy finances, then you're going to have missed deductions. If you have missed deductions, guess what? Your taxes are higher. So it's important to get organized, make sure you have things in the proper place, make sure that they're accessible, and make sure that you send the information in early to your tax preparer because I know how it is. When you're doing things last minute, then it's hard for the preparer, and then you have a higher chance of missing things, right? Because now your preparer doesn't have enough time to go through your return and see how they can save you money. So if you're a W 2 employee, make sure that you have your last check up, that you're looking at it and making sure that everything is fine, that you're tracking your child care if you have a child that is less than 13 years old. And for business owners, get a separate bank account. I mean, it's so much easier to keep track. And then you also avoid commingling, right? So make sure you have your separate bank account, you're tracking your expenses, you're reconciling your books, you're logging your mileage, and if necessary, get a CPA or an accountant to look through your books and make sure that things are done properly. Because the IRS is also checking these things and asking a lot of questions to make sure that what is reported is correct. Now, if organization is not your thing and you need help, as I said earlier, you can schedule a one on one session with us. Now, there's some credits that most people miss, and I was surprised with some of them because for me, it just seemed so ordinary. And I'm just going to list them out. So you have child tax credit, education credit, savers credit. This is a big one that persons can use if you're low income. Earned income credit, energy credits, adoption credit. So these are some that you can use. These are big savings that you're missing out if you're not taking advantage of these credits. Because what credits do is that they reduce your taxes. So a dollar for a dollar reduce. If you have a deduction, then it's just reducing your taxable income by a certain percentage based on your tax percentage. So it's very important to take advantage of that. The next thing I'm going to look at is your filing status. Now, this is a small box on your tax return, but it comes with big consequences. There are different filing status that you can use, and depending on what it is, it will determine your bracket, your tax bracket that you're going to be in, the credits that you can take, whether you're going to get a refund or you're going to owe taxes. And so you can file married filing jointly or married filing separately. But be careful because if you're married filing separately, there are some credits that you don't get, and then your tax bracket will be higher because now you're being taxed as a single person who's taxed higher than a married person. And then a lot of women qualify for head of household if you have children, living with you, then you can qualify for head of household, and some people miss that. So just be aware of that. Make sure that you get a professional who can assist you to get your taxes done properly and take advantage of these deductions and these credits that you can use to reduce your tax liability. So now we go to the mindset shift because I can't talk about taxes without that mindset shift. And if you've been listening to us for a while, then you would know that I'm big on mindset, the renewing of your mind. And that's, the Bible talks about renewing of your mind. And it starts in your mind. A lot of it starts in your mind. So you've already tackled fear around saving, you've already tackled fear around investing, and now I'm breaking fear around taxes, right? Yes. Taxes aren't the enemy. Confusion about taxes is the enemy. So we're going to make sure that you understand what is involved. And once you understand, then you're more prepared to face the challenge of making sure that you're well on your way to financial freedom. So as I close, I want to remind you that you're not behind. I've said that many times in many episodes before, that you're on the journey to financial freedom. And sometimes it takes longer than you want, but you're taking ownership of your money story. You're doing this one intentional step at a time. And I hope that these strategies you can apply to your life You have 30 days at this point to implement some of these things and make sure that you're keeping more of your money in your pocket and you're walking into the tax season stress free. Yeah, wouldn't that be lovely? So, thank you for hanging out with me today. I hope this episode has been helpful to you. And if it has, please pass it on to another woman or a man. And this could be the best Christmas gift that you give all year because you're saving money, you're passing knowledge on to others, which is very powerful and very valuable. Now, connect with us on Instagram at underscore financial flourish. You can also find us on Spotify and Apple Podcasts, Financial Flourish, or go to our website, absoluteaccountingcpa.com, and click on Financial Flourish at the top of the page. So, ladies, as I leave you now, my advice to you is to take one more step towards your financial goal and don't forget to flourish.